here for this exciting session on the future of finance. And these gentlemen sitting next to me will define the future of finance in the next 40 minutes. And I'm sure there are a lot of questions from the floor, which you have time for, hopefully. Can I ask each of the panelists to introduce themselves for a minute? Yourself and your company, and then start. Neeraj?
My name is Neeraj Makin. I head the group strategy, advanced analytics, and the corporate venture capital fund with Emirates and MENA. As you know, Emirates and MENA this introduction is for
Hi, I'm Alex Manson. I set up and run DC Ventures, the venture building arm backed by Sarkar.
I'm Julian, CEO of Zodia Custody, which is a Standard Chartered Ventures backed business.
Hello, I'm Sham, CEO, co-founder of Aquanow, or an infrastructure liquidity provider.
And I'm sure Sarkar, I've been a banker for 37 years. Now I do advisory work for banks, for fintechs, and payment companies. I also host a podcast called Majlis every 2 weeks. Very glad to be here. Let me kick off by defining CVC a little bit, so all of us on the same page. CVCs comprise investment of corporate funds directly into external startup companies. And globally, CVCs make up about 20% of total venture capital financing across different sectors. Now, fintech is one of the largest sectors that CVCs invest in. Last year, when I checked, the total investment into CVCs, by CVCs into fintechs, was about $8 billion US, which is roughly 16% of total CVC funding that happened. The investments, as we know, peaked in 2021, but then we have the funding winter, 22, 23. Last year it picked up a little bit, essentially based on a lot of investments in AI and AI-based companies. On a different note, we talked about it in the earlier session as well, cryptocurrencies and digital currency assets have become obviously a huge movement across the world. And globally today, there are 550 million investors in cryptocurrency. That's more than 10% of the world's adult population. Interestingly, UAE has the largest penetration of crypto investments. 1 in 3 adults in UAE have invested in crypto products. And we're seeing the central bank here in the region are sponsoring CBDCs, getting the regulation of digital assets. And we are seeing this, I won't say battle, but connection between TradFi and DeFi. And the question is, what will emerge out of these two very different ways of payment and store of value in the future? My friend and futurist Chris Skinner says it'll come to hybrid finance, what he calls hi-fi. Let's see what our panelists think here. Alex, first question to you. One of the 4 themes of SC Ventures is digital assets, and you invest in Zodia Custody. As I next to you is the founder of Zodia Custody. You've done other investments, also digital assets. You are born out of a TradFi bank, Standard Chartered. How do you see digital assets shaping the future of finance?
Well, the premise is that digital assets will shape the future of finance. In other words, that digital assets are here to stay. And I didn't say Bitcoin's going up or down, but I may have a view, but that's not relevant. What I'm saying is cryptocurrencies, digital assets, obviously stablecoins are here to stay. However, in order to shape the future of financial services, what it takes is institutional-grade infrastructure. Right? You also say bank-grade infrastructure, which we've set up to build, expecting that adoption and expecting that change in the industry. I might add, the first one we built was Zodia Custody, because I looked around and I was looking to get involved in the asset class, and left, right, there were a bunch of startups doing custody. Some of them were very well funded, but they were not institutional grade. I mean, conduct of business, I mean, segregation of duties, I mean, technological resilience, I mean, a whole bunch of things that belong to a bank grade custodian. And so we parked some of the other ideas and started with the basic, which is custody. And then from there, a number of other ventures across the
And how many investors do you have in digital assets?
So generally speaking, we've built 30 ventures and have 20 minority stakes. We're rounding the numbers on that now. In partners that we work with in the context of building the ventures, I'd say digital assets is about a third of that, and growing obviously.
Julian, your company Zodia was created by SC Ventures and funded by Emirates as well. You are in a unique position of two banking leaders, traditional banking leaders, investing in your company. Question, why do you think they chose Zodia to invest? And the second part of the question is, how do you think digital assets will evolve in the next 5 years, especially in terms of partnership with TradFi companies?
So I think I'd answer that in two forms. If we take a step back, as Alex mentioned, the future is blockchain. We can have a debate about individual coins, but this is the future. And therefore, what we are seeing is that a number of financial institutions around the globe are going, what is this? How do I use this? What is the capability that I need in the business? And what we have is that capability, we have that knowledge and that know-how. So while we are majority owned by Standard Chartered Ventures, we also have Emirates, and we also have a number of other banks globally that are wanting to do two things. One is to have access to our technology and our processes and our people and our knowledge. And the second one is then think about how that knowledge transfer works within their business. And so majority of our shareholders actually use us. We supply technology services, custody services, regulated services to our shareholders in a range of different ways. So I think to go back to the exam question, I think it is a different relationship than a traditional venture capital, because our shareholders are also our clients and our customers. Where that will evolve to, I am sure, is that far greater knowledge sharing at the moment is typically more one way. We're the experts and we help our shareholders and our clients to bring up the knowledge. Where I think will happen in the future is there's much more partnership around product direction, around strategy and execution of that. So I think it's a journey in terms of how our shareholders will use us in the future.
Excellent. Neeraj, the $100 million Emirates Innovation Fund has about 10 investments today, and you've provided about 80 fintechs globally, I believe. My question to you is, how do you choose the companies, the investing companies, before you decide on which one? And are there sectors you focus on? What is your philosophy of the fund?
So the philosophy of the fund is that we want to invest in fintech, where we see that the product or the service they're building as a strategic use case for the bank. The whole idea was to future-proof the bank in terms of the technological innovation which is happening. And sometimes, given our legacy systems or given the way our large organizations think and the bureaucracy which is out there, you may not be that fast to market. Sometimes it's better to see somebody else develop that, see if you can adopt that. Now, the biggest challenge which we faced while you were also around was that we tried to do a few things, but we weren't able to get those partnerships going because there wasn't that win-win formula which was out there. And I think so what we did was, by setting up that innovation fund, is we strive to kind of set up a sort of a platform where we say, okay, here's a particular fintech which is doing something, solving a problem, existing problem for a business, for a bank, and we bring that we bring that partnership in, but alongside invest, it gives us growth capital, and then it also allows us that, look, as this fintech grows, we also kind of benefit out of it. So it's a win-win. And then the other thing what happens is that in case that fintech needs funding, or in case that fintech, given that we present in 13 countries, we can open a whole lot of markets, whole lot of client segments for them. So that was the whole idea of what we wanted to do. How we go about selecting the things, so we sat down and we identified what are the areas we want to do. Digital assets was one, where we believe stable coins and other stuff is going to be the future, which is where transactions will happen. And without knowing which way, which technology, which platform will come, you cannot kind of commit yourself to one time doing yourself. So the idea again was, okay, let's look at various platforms which are coming up. let's tie up with them and let's see which one comes out and which is the one which is widely adopted around the world. Second area which we are looking at is all AI based, right? And we're seeing that AI-based fintechs are doing a whole lot in bringing a whole lot of efficiencies in risk management, on the compliance side, on customer service, and those areas again which we are looking to invest in. I think the third area is digital trade finance, which is a very important area, and we've made a few investments on digital trade finance also. Payments is another area which we're looking at, and payments again kind of crosses over with digital assets also, blockchain also. So those are some of the areas which again we are looking at. And finally, it's wealth tech, reg tech. So these are the areas. And how we go about choosing is basically working through partnerships with SC Ventures. We have some other CVCs from banks like Santander, Citi, plus also our own digital teams and our own business teams, because they go out, they meet these people come to them to sell their product or to kind of give their demos and all. And if something is interesting which the business is willing to sponsor, we then kind of step in to see if there's an investment case also.
And what do you say is more important to you? Is it the financial returns or is it the synergy?
I think both go equally. We've been given $100 million. It's not that for us to kind of blow the $100 million up. There is a expectation that there will be a financial return, but that's not the only expectation, and there is no time out. I think that's the benefit we have from a CVC perspective. So you have to have some sort of a strategic objectives to be met by using a particular fintech out there. It's solving a particular problem for the bank in terms of customer service, in terms of any journey, maybe somewhere in the middleware in the bank when we are trying to operate, some of the stuff which you don't see widely on the corporate side or on the treasury side, it's trying to solve some of those things. So there should be some operational impact or some strategic impact or some problem which is trying to solve, and what is the impact. So I think we look at both from a strategic and financial.
But you're patient capital.
Yes, it's very patient.
Okay. Phil, your company Aquanow recently enabled LIV, the digital bank of MENA, to launch their cryptocurrency products, right? Association with Zodia. The UAE, as we talked about earlier, is an early mover in digital assets with a very high customer adoption. 1 in 3 around here deal with crypto and digital asset products. How do you see the retail adoption of digital assets in this country? And from your perspective, what are some of the early use cases you are seeing?
Yeah, I think there are a few things. Like one is, of course, one of the adults in the UAE are adopted in crypto, have used crypto, invested in crypto. The question then is how do we get the other 2/3 involved? A lot of that involves a much better user journey for a lot of people that may not be extremely tech savvy to get involved and get on and off ramp into the digital asset ecosystem. Once users are adopted into the ecosystem, meaning they can buy and sell crypto like Bitcoin and stable coins, then we can start imagining other use cases. Payment infrastructure can be used to distribute digital gold, can be used to distribute real estate, tokenize any other tokenized products, and that's one way for adoption. The other perspective is that if we start looking at enabling a number of banks around the world that has the on-off ramp capabilities, then we can start thinking about payment use cases. That's cross-border payments, merchant acquiring, all of that's through crypto. So I think that's going to be probably the next wave after everyone can get on-off ramp into the digital asset ecosystem.
And for a variety of use cases, Phil, do you think this region is ahead of the rest of the countries in terms of
I think
use cases?
Yes, so we started coming to the UAE maybe about 4 years ago, the regulators there have been extremely supportive on various different business models to allow companies such as ourselves to work with banks to create a framework that is actually a product that can be launched within the comforts of all the stakeholders. That's a really important a piece of component. We've seen this also happening in some other markets now, but I would say the UAE is really a driving force. We start looking at other use cases like crypto payments and all of that. Actually, the UAE is one of the largest trade corridors around the world. So all that use cases, it becomes a really, really nice place to anchor a lot of these use cases for globally.
Excellent. Alex, stable coins are being called as a killer app for digital assets. Stable coins. We've seen announcements in the region here, for example, an Abu Dhabi, sovereign wealth fund is launching a stablecoin called Emirates, and the central bank has got regulations in place now. So do you foresee a lot of adoption by customers of stablecoins, both corporate customers, governments, as well as individuals? What is the future of stablecoins in your view?
So yes, I foresee adoption. The first point would be I echo Phil's point, which is first you enable the infrastructure. Right? Everything starts with robust institutional grade infrastructure, and then use cases abound. And indeed, we're now tokenizing securities, ETFs, commodities. We're on our way to tokenizing IP, all of which can be traded on what I characterize as the financial rails for the future, meaning digital assets rail. So infrastructure is the first point. The second point I make is, of course, people will adopt stablecoins. In fact, we think the killer app for stablecoins will be payments. But bear in mind that we don't think a whole lot about what happens when you send an email. Just type your email, it's sent. A bunch of things happen now, right? In the background, it's actually quite complex. You couldn't care less because you know that email is going to go from A to B. Most stablecoins exist for a few seconds. They exist the time of the settlement payment. Then we settle, we burn them, and that's the convenience, 24/7, global liquidity, convenience that users would be expecting. So in many ways, I would expect users to adopt the instrument over time without necessarily knowing they have to, because infrastructure is here, it's robust, it's kind of great, you can trust it, and the use case is as seamless as it gets integrated into everyone's life.
Phil, on that point, 95% of stablecoins are linked to the US dollar. Some people say it's defeating the purpose because you're not getting out of the centralization of coins, yeah? You're still linked to the US dollar. What is your view on that?
I think we're still at super early stage of stablecoin adoption. We look at the growth of stablecoins, about maybe 240 billion in market cap, 50% growth last year. If we think about really the history of stablecoin, to answer your question, actually USDT, for example, created on one of the global exchanges like the FinTech at the time. We would allow users to buy and sell crypto efficiently, where crypto is priced in dollars, where banking is difficult for crypto, right? So one is a lot of the assets in crypto today is priced in dollars. That's still a very big use case for stablecoin, and therefore, that's still US dollar is still an important kind of component of it. What we're seeing though is a lot of different kind of localized stablecoin, such as the AE coin in the UAE, starting to come up in different markets. And I think the idea there is if we can think about a world where in the remittance markets where you have payment tokens that are licensed locally to be able to do payments with local currencies. You have some kind of swap pool or interoperability between that and a dollar stablecoin, which is where trades are happening, and then you create a kind of a global ecosystem. I would also won't be super surprised if we start seeing some decoupling of kind of the bid of accounts and the store value inside of the stablecoin, where store value is right now $2 to $1 but perhaps it could be a basket of currencies, it could be gold, it could be anything else. But global trade, a lot of it is still happening in dollars. So the unit of accounts, trade still has to be in dollars. I think there's going to be probably maybe some version of that if I were to imagine what the world could look like. So that's kind of, and then we see more experimental stuff algorithmic stablecoin, gold back, all the other, which is not quite ready for institutional adoption yet. We'll see kind of more experiments in the industry. We'll see how it goes.
Got it. Neeraj, sorry, you're coming on that?
I just wanted to say, I think it's a chicken and egg story, right? Somebody might say that if there are stable coins done on some of the currencies, you can move the global trade away from the dollar hegemony, which is out there. But then there's another school of thought which will say that, look, first the trade needs to start moving. The counterparties which are trading, they should learn or they should be happy to accept in some other currency, and then that currency stablecoin goes up. I think this is a dilemma which will continue to exist, but I think first mover will have to be the buyer and seller. If they are willing to take risk on some other currency, you will see stable coins going up in those currencies.
Fair point. Neeraj, with the National Blockchain Center dedicated to UAE, and the 400 blockchain companies calling UAE their home, Dubai and UAE are the center of the virtual asset revolution. How are banks like Emirates positioning themselves for this?
So we are at the center of this. So we, again, as I mentioned earlier, we are looking at digital assets and blockchain as one of the key investment areas. We've invested in Zodia custody. We are one of the first banks in the region to use LIV for our customers to allow crypto trading. So we've been working with Vara to do other stuff, services from banking. It's all about meeting all the regulatory norms, being comfortable and being able to manage risk. And I think so on all those fronts, Emirates NBD has been taking a lead on that front. And we do see this region itself becoming a hotbed for these innovations or these acceptances to kind of come through. From our perspective, we've been working to look at from a payments perspective. Also, in one of the investments we've done is in a company called Bashia, which is again a blockchain-based or digital ledger technology for payments, which is an alternative to SWIFT. And we again, like what we have with Stanchart of the partnership, there again Stanchart is one of the partners out there. BBS is there, JP Morgan is there. So we are in a sense we are looking at more such partnerships. I think the challenge which I see going forward is what Alex was also talking about, is having that standardized infrastructure for those payments or for those blockchain to kind of go through. Right now there are multiple experiments or there are multiple proof of values or platforms which are developing. Which one is going to survive? I think I like your example when you talked about that email click, right? So today you don't know what's happening and you know that when you press the button, the email will reach. I think on the blockchain side or on the digital asset side, one of the key things is that commonality, the standardization, interoperability, and scaling. I think these are the three important points. We still, as an industry, have not been able to solve that or work for that. It's like in telecom industry 25 years ago, where you kind of came and you said we have one standard for mobile communication. I think till the time we get that one standardization for blockchain-based payments and all, I think it will be hit and trial, but I think everybody's trying and same as Emirates NBD.
Got it. Julian, Zodia has received funding from different financial institutions. Some like you say Emirates NBD or Alex Ventures are patient capital, and some might be more impatient, might want to pick up financial returns. From your perspective, how do you balance the objectives of the various investors that come on board? I mean, research shows that CVCs can actually empower startups to exit at 2x valuation than a normal VC funding can. But there are other challenges with CVC, right? How do you balance the corporate investments? And you two of them fitting your next to it.
Yeah, I think it's interesting for Julian to hear me call patient.
Yes.
The good news is you're pretty relentless yourself. So
yeah. I think it is an interesting challenge, and I think it is something that we as a management team are very focused on and working with our investors. But I also think it's about finding the right investors on our cap table, the ones who are looking at understanding what we do. This is the future. How can they engage? How can they use our capabilities and really partner with that? So I think it means it's a different conversation. It's a different conversation when you're fundraising. It's a different conversation when we have our investors on the cap table. And how does that work within the board construct? As I mentioned earlier, we're majority owned by Standard Chartered, so we adopt their policies and procedures, etc. That is super, super important for our clients. Then getting external validation that goes again from Emirates, from Northern Trust, from National Australia Bank, etc. also just builds out that strong capability, which absolutely helps our clients. It also helps that narrative, which I think we've got a common theme today, on how are we lifting the industry up ensuring that we are putting the right standards in, we are doing the right things to attract and give trust to consumers and institutions in terms of what they're trying to do in the marketplace. So it is really, really important that we get those investors right and they understand how patient they need to be on that journey.
Excellent, diplomatic answer. Thank you for that. Neeraj, globally we've seen some very good or iconic CVC startup partnerships. Google Venture, Uber for example, the Google provided the easy access to the maps. Qualcomm and Fitbit, where Qualcomm provided the chips. In the Middle East, we see PayPal Ventures investing in Italy and DFS startup. What qualities do you think a CVC brings to these startups? And what should the startup look for in the CVC to provide?
I think one of the key things which a startup looks to a CVC is getting access to a market, right, or a customer segment. Specifically, and it depends upon the kind of startup you are, right? If you're B2C, then again, from a CVC perspective, a bank which has a million customers, then you open that customer area for them. It's like gold dust for that startup. From a CVC's perspective, what you can provide to a startup again is a platform to test the technology, provide that access, and also because the startup is solving a problem for the parent organization, and that's very important. So I think what needs to happen is that there should be meeting of objectives, right? There are strategic objectives which the startup needs to meet, and then there are similar objectives which a CVC needs to meet. I think the other thing which a CVC provides to a startup is that stability, which you talked about, right? We are patient investors. The one thing which I was talking to Alex earlier in the morning is that in case a startup is not doing well or is not able to scale up the way it's wanting to, traditional VCs then tend to kind of try the funding you're not getting. However, if you are embedded with a CVC where your product has become an integral part of that CVC's parent organization or is still looking, it always has that additional opportunity or ability to say that, okay, you can make the strategic investment, take that startup over, integrate it into the bank or the CV or the parent organization. Or the other way could be that knowing that product or that technology is so important for the bank, you may actually double down on the investment and say that, look, you're important, I'll continue funding you, I'll give you that grant to continue developing the product further, and we will open other markets for you. We will try to work with other banks and all. So I think the ability for CVC to get these things together and link these things together is a much more, I think, useful option for a startup than what a traditional VC would do.
So Alex, on that point, how do you balance the culture of a bank like Standard Chartered, which is obviously much more risk-averse just by definition, along with the risk-taking startup? Do you keep a Chinese wall? Is that the benefit you do? Or do you allow free flow? The risk is a free flow. Will you slow down the startup?
I think, first, as I answer your question, I just pick up on a point Neeraj just made. The fundamental difference in your case is you're a user and a scaler of the technology and the capability. So financial returns are non-negotiable, and that's an operating constraint. But within that operating constraint, patient, not patient, but operating constraint, you're going for transformational impact as a user of the technology, which is very different from just the mindset of investing. You're going to see the difference. And that's the answer to your question as well, which is ultimately we're balancing out the need for experimentation and trying and allowing a company to meander perhaps a little bit and sometimes fail completely, or pivot many times. Why do something and then scale it. While in fact we will make no compromise on banking standards, institutional grade standards, on compliance, on cybersecurity, on all the things you'd expect both the bank and frankly policymakers, regulators to be very focused on, and that's the balancing act we were creating. The point I make is governance is key. There's an element of ensuring that we have the right governance across the backer, as well as us as a platform, as well as the ventures themselves. Julian, Zodia custody, but all the other ventures have to prove themselves commercially and financially, and in so doing, make a point. The point is, works. And if it works, you will thrive and become a great company. If it didn't work, then part of taking the risk also implies that we'll draw the consequences.
My question then, Alex, is what are your metrics? What does good look like? Is it transfer of talent? Is it market entry for the startup? Is it financial returns for you? How do you measure the success of this EVC?
All of the above. I refuse to choose. So as I said, financial returns, non-negotiable, it's an operating constraint. Within that operating constraint, it's set out to reward the DD in banking, and that means serving clients the way they want to be served and the way they should be served, which is ultimately reconciling financial services and the expectations that society has from financial services. So we're really going through transformational impact, and digital assets is a huge part of that.
Neeraj, the answer is different from that?
No, pretty much the same. It has it's all of what you said, right?
Phil, we had a discussion in my podcast, Majlis, some months back, about the negatives of cryptocurrency and investment, especially for investors who study for the first time, right? It's a volatile currency, there are risks of frauds, there's a lot of crime that happens on rails of cryptocurrency. How do you protect investors from the ills of crypto investments?
I think two things here. One is we look at, we're not always reinventing the wheel. There are traditional systems and financial services that are already out there that are, KYC, AML, all operational excellence, all that stuff. It's this is another asset class that we're trading. That's, we need to make sure that we meet the same standards that other asset classes, number one. Number two is then understanding what are the new service areas of this, and also what does the technology actually provide that can help us minimize those risks. So for example, if there's a blockchain and a blockchain is very transparent, the ledger is public, so all transaction records are you can see that history. So we use tools like the analysis and the elliptic and so forth to make sure that all the transactions on chain are scanned, and then also understanding, for example, if we were working with large financial institutions who is very familiar with dealing with, let's say, fiat, but maybe the crypto service area is new, being able to take in money from all these different places, what are some of the reporting, some of the tools that needs to be built to handle those kind of new service area. That's important. And if we just look at the other part of the question, which is Bitcoin, I think probably one of the best features for Bitcoin early stage was the volatility. Because the volatility brings attention, media, and adoption. But we do see a volatility start to subside over the years as the asset class become more mature. But at the same time, we also see a lot of new assets popping up, and all that has to be controlled by the framework. And that framework could be a regulatory framework that that has controls around what type of assets can be listed, investors' education around around people knowing what they're actually investing in, and also from the platform's perspective, running know your products to make sure that we're not investing in a product that has characteristics that falls beyond the risk framework that we prefer.
I was just going to add a plug for both the NBD and Zodia custody here, which is in the early days of adoption, a bit of Far West, a bit of told you so, which is not particularly helpful and constructive. Frankly, I hate to see early adopters get hurt. It did happen. And the reality is holding your assets in the early days of crypto was equivalent to, leaving your money in someone else's sovereign under someone else's head, which you may not want to do with all your savings, and certainly not at institutional grade with widows and orphans money. So there was an element of going through that phase of early adoption, learning some lessons, and then building bank-grade infrastructure, scaling it, institutionalizing it, and having the ability to tell consumers, this is great, this is safe, this I will not lose the holding. It may go up and down because it's volatile, but I will not lose it.
No, well said. Julian, DeFi proponents want a libertarian world with no big brother watching. TradFi proponents are worried about AML, control, security, etc. How do you see these two worlds coming together into quite hi-fi, hybrid finance, one-fi, whatever? How will this work together?
I like how you said work together, because you hear a lot of people talking about DeFi versus TradFi, and it feels like it's a big battle that's going on, and it can't be. It needs to be working together. And the reason why is regulation. What I think we've got with DeFi is some interesting ideas, interesting concepts that need to be applied into the regulatory framework, which we all have to adhere to. But we shouldn't stifle what DeFi has the potential to do. What we've got to do is to learn and use that as the early adopters, the innovators who are trying something new, challenging the norm. But also we need to recognise as regulated entities, as we all are here, is that we have to follow regulations, we have to follow the right controls, the right processes. So it's getting that balance right, which I think is super important. You know, regulation always follows innovation, and therefore we need to look and understand what that innovation is, understand how it can be applied, work with the wider ecosystem of trade associations, government and regulators to see how they can go on that journey. And I think what is super important is our industry, this crypto industry, is running so fast that I do feel sorry for regulators out there, just because as soon as they grasp one bit, the industry has moved on, and we have a role to play to work with them and to help them work through that. But I don't think it's a them and us. I don't think it's DeFi versus TradFi, or DeFi versus the other parts of crypto, or stable coins, or tokenization of real-world assets as part of a spectrum, and we've got a role to play here.
Thank you for that. We have less than 5 minutes to go. So I'm going to ask a series of rapid-fire questions to all of you gentlemen. You get 5 seconds to think about the answer, and please answer in one sentence. The reaction to a statement about 2030. Imagine we're in May 2030. 5 years from now, and react to what I'm saying. So, start with you, Julian. 2030, cryptocurrencies have become a mainstay of the financial system, or have remained a hobby and a cult.
If you said blockchain, I would say 100%. If you go crypto has an absolute role in 2030, but I don't know if it's going to be the mainstay. I think stable coins, tokenization, the blockchain, things we haven't imagined to date, will be applied.
Excellent. Alex, financial inclusion has reached a stage where the 1.4 billion today on the bank has come down to a few million by 2030.
Think of financial inclusion in the context of an individual settling coins on the blockchain via an AI agent in an immersive metaverse type environment. All together. All these things are very powerfully intertwined. Powerful.
Neeraj, there are digital banks today in 2030 which are entirely by AI.
Pretty much possible, and by AI I mean it will be both generative AI and traditional machine learning for decision making. I wouldn't be surprised in 5 years there's, we used to talk about 5 years ago having a branchless bank. You may start having 20% people of what some neobank has number of people. You could probably run that bank with Gen AI and AI at 20% of the people required. But it will depend a whole lot of regulatory maturity and all and everything.
Phil, cross-border payments are done entirely with CBDCs.
Yeah, maybe CBDC would be used for a lot of interbank transactions, private stablecoin for more P2P retail type transactions.
Julian, in the UAE, 100% of corporate transactions are done with NFTs.
Yes, as long as we understand what we mean by using NFTs for property. So if it is books and records, then yes. If it is fractionalization, I would say no.
Alex?
If you want a short answer.
Thank you. Alex, cash currency will sort of disappear and will become a hobbyist collector item.
I think there's a role for cash, and there's a role for people who are going to safely on and off ramp fiat, cash, digital, coin, all the various means of exchanges. It just needs to be done safely.
Neeraj, most P2P transactions are done using crypto in the region.
Crypto, no, I think probably a little bit far off. As I mentioned, you don't have the standardized systems for that to happen.
Phil, crypto mining is banned for environmental reasons, and the price of Bitcoin becomes $1 million.
Well, the price of Bitcoin $1 million is basically hashing gold, so I think it's quite possible. Crypto miners, I think that's more of. I think there's going to be a lot more computations that's required for the blockchain industry, the AI industry, probably a number of different industries. But I think that's going to be that's probably my prediction.
Thank you. We have time for maybe 2 or 3 questions from the floor. Any urgent questions, I can ask the mic to come around to you. Any hands showing up for the gentleman here? Question there.
Hi. Do you think in next 5 years can we solve the identification problem for the people who are unbanked with us?
Identification model for people unbanked. Alex, will you solve that problem?
Very encouraged, very excited about the advancement of technology, and when we assemble the bits and pieces of data science, using data to integrate financial and informational flows, which enables us to do with people, but also SMEs and corporates, things that wouldn't have been possible only a few years ago. So technology is a factor of financial inclusion, meaning serving people the right way, first including them, but also serving them the right way. Very excited about this.
Any other question? Yes, yeah.
Thank you for this session, very informative. I represent InsurTech. So I just wanted to ask, because I saw that this is the forum where I should bring it, that I'm the global chairman of under the IFC Global Association of InsurTech Profession. Is there, if you draw a parallel from the old days and if we talk about now, am I audible?
Yeah.
Okay. So the payment in insurance normally is the same routine old years back which it used to be, but now the change of the currencies and the use of cryptos and many other things, there are a lot of questions which are there. So my question is now, do you guys, as an expert from the fintech industry and from the banking segment, do you feel that we can draw some parallel and use this digital economy to bring into InsurTech, which is not at the moment? Normally by compliance, I'm talking about taking into consideration regulation does not allow worldwide scale.
Yeah.
So yes, I think it's purely possible to do so. And I think again using blockchain as a platform where your insurance contracts could be issued and payments can be run on the blockchain on the other side, it could be, you could probably bring on something and these could be atomic payments and all that thing which will ease that problem which you're kind of talking about. So I think it's pretty much possible for that to happen.
Yeah, and I would say it's also very important to get on with it. Think of our children playing in an immersive environment and owning, settling coins, say in the metaverse. That means financial institutions have to adapt and be able to operate these rails. But by the way, by the time there's more ownership in an immersive environment in the form of tokens than there is in the quote-unquote physical world, well, you're going to need insurance for that. You're going to need a whole bunch of financial services in the context of the way the world has evolved. And so I think it's critical that insurance evolves as well.
One last question and we'll close.
Time's up.
Sorry. That's all. Okay. Neeraj, Makin, Alex, Manson, Julian, Sawyer, Sham, thank you very much for your time today, for all those comments, and I thought we had a good discussion. Thank you.